Hello and welcome to another update video about ADA. I think on the ADA chart we need to prepare for a somewhat big move. This is typically what's going to happen if we see prices heading deep into the apex of a triangle. It's really trendless at the moment. Yeah, it's without trend since, you could say, November, early November, 11th of November. Yeah, I mean, we are still in November. Early November, yeah. So 2 to 3 weeks clearly without trend. There's a balance of forces that you can see at play here. Very, very neutral price action, triangle, overlapping price action, sideways bound. And what we can see here is still unchanged scenarios. Okay, let me try to explain the scenarios again and then also highlight where such a big move could take us. So, I mean, you need to see it in perspective. It's not like it's going to go to the moon or anything. I mean, I'm talking about maybe, I will talk about that. Okay, so there is still on the ADA chart, when we look at the bigger picture, of course, and I haven't talked about that for a while, but for anybody who's come new to the channel and has started to follow the ADA videos maybe throughout the last week or so, I kept the videos short because I was traveling, but we need to understand that another bear market low is still possible. So another bear market low is still possible because this here is so far only very clearly a 3-wave move up. 3 waves, okay? Now that can turn into a 5-wave move, and that's what I'm primarily tracking at the moment. It could turn into a diagonal. So the wave 1 was done, the wave 2 was done, the wave 3 currently in the making, the wave 4 not yet started, and the wave 5. 5-wave move would be ideal, okay? That's sort of what we're looking for to get a first understanding that a lasting low has been established in June and that we're actually in a larger uptrend. Until then, yeah, we can track the short-term trend, which is what we're doing, but really you want a meaningful 5-wave move to understand that we are, let's say, back in the bull run. It's all about, cascading probabilities. So this can still push higher, of course, and we're tracking that primarily. And I'm going to focus on higher in this diagonal structure as long as we're holding above the 26.4 cent Fibonacci support level. So as long as we're holding above that level, focusing on higher. Below that level, I have to take a more bearish perspective, a more directly bearish perspective. Now, what you need to understand is that this move up isn't necessarily bullish. Due to the context. Context is very important in Elliott wave. So yes, 5-wave up, fine. Yeah, could be a leading diagonal in a wave 1. The bear market low could have been here. And then we're watching for a 3-wave pullback in a wave 2. I will provide you with a support area. And if it works, we can rally in a 3rd wave. However, due to the context, this 5-wave move could also just be a C wave. Basically not a leading diagonal, but an ending diagonal, because it could be embedded in a larger A, B, C structure. And the B wave was an overshooting B wave to the downside. And this ABC structure forms a wave 4, which then can result in another bear market low in a wave 5, which would finish off, looking at the bigger picture, the overall bear market. Okay, I'm not suggesting we go down to below 10 cents or something, but yeah, no, maybe 15 cents, something like that. We will be able to calculate that more precisely once we see that coming. It's too early to even, we don't know. Yeah, it's just not, there's no clarity in the price at all that would tell me, have we already bottomed and are we on our way into a bull run? It's far too weak, the price action for that. But I allow here for a diagonal, and at the end of the diagonal, we will have to consider the structure of the next decline. So when we approach here when we get close to the end of these 5 waves, then I will give you a relevant micro support. That micro support can be used to still trade higher. But I will tell you that, okay, let's say micro support will be somewhere there. Let's say if we break it, then we are likely entering that larger pullback. And then we will have to very, very closely pay attention to the structure. If it's a corrective pullback, then we can add a support area and it would be a long trade setup. If it's impulsive and anything unusual is about it, then yeah, we're likely going to go to new bear market lows. I think that's how we need to approach this. Until then, we're following the diagonal structure and we're focusing on higher. There are just a couple of ways how this can happen. There are two possible or likely subdivisions of this third wave in the diagonal. So, well, it's the same. It's basically an ABC structure. The only question that I have and that the market needs to answer is the A wave a 3-wave move or is the A wave a 5-wave move? Both are possible scenarios. If the A wave is a 3-wave move, then it could have topped already. We might now be in a B wave and then move up in wave C. And therefore I did tell you, for the B wave, the support is 26.4 cents. Therefore I highlighted, as long as we're holding 26.4 cents, the focus can overall be still on higher. The other scenario is that the wave A is not finished yet and we get one more high in wave A. That's sort of what I'm focusing on. But again, probabilities here are very balanced, and hopefully the context gives you an understanding that it doesn't really matter too much which one it is of these. As long as we're holding 26.4 cents, we should be good. Okay, but yeah, if we get one more high in wave A, because that scenario never broke, we either form a triangle here in wave 4, and we can break out of it directly. But I gave you key breakout points. 40 cents will be the first indication that the triangle is breaking to the upside. A break above 41 cents would be confirmation. These two highs. Now that hasn't happened yet, and it can then send us into the region between 43 to 48 cents, maybe even 53. If we see a break to the downside of the triangle, and that would be first a break below 36.9 cents, followed by a break below 35.6 cents, then it's likely that the wave 4 actually unfolded just as a normal ABC structure. A wave down, the B wave is the triangle, and we're now coming down in a C wave. But then again, we just use that orange support area. Okay, and support can then be found at 35.1 cent, 32.6, 30.7, and even 29 cents. Only below 29 cents, the yellow wave count, which assumes one more high in the A wave, will get very unlikely. Okay, and I have to assume we're already in the B wave. And then 26.4 cents is still bullish support. So the focus is on higher, especially against 26.4 cents overall. Then in the very short term here, basically against 29 cents, but ideally we don't even get down that much. And I'm watching actually if this triangle can do a direct breakout to the upside, but at the moment there's just a balance of forces. But whenever the price is getting squeezed into the apex of a triangle, it can prepare us for a big move. Now that might be a big move to the downside, and I gave you the relevant breakout points to the downside to watch, or to the upside. Okay, that's my update about ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. Here you can find additional content every single day, and you can find the links in the video description. Thanks a lot for watching. Bye-bye.